Hey everyone, welcome back. I'm Matt, along with my brother Anthony. We are from the Pitti Group Wealth Management, and this is the Finance Things in Life. Today we have Brian from JD Chapman, Vice President, and today we're going to be talking about everything insurance and how to protect your assets.
Beautiful.
Welcome.
Thank you. Yeah, thanks for having me, guys. Appreciate it.
Absolutely. Thanks for joining us. You want to talk a little bit about yourself, kind of what it is you do, a little bit about the business?
Yeah, absolutely. So I'm Brian Chapman from JD Chapman Agency. I'm the vice president there. We are a family-owned and operated independent insurance broker. We were founded in 1958 by my grandfather. And to this day, myself and my cousin Trevor own the business. We have locations in Macedon and Canandaigua, New York. And we're pretty much insurance generalists. So by that, I mean, we both do personal insurance for auto, home, boat. And then we also do commercial lines insurance for any forms of business, really.
That's awesome.
Family business, 1958. That's a long time.
Yeah.
It's amazing what one person's decision to start a business evolved into.
Right.
Yeah.
Right.
That's pretty cool that your grandfather started it.
Yep.
Yeah, I feel like most family businesses don't make it past generation 2 or
The statistic is the third generation.
The third
is the
generation.
one
Oh,
that
so
kind of puts
you're
it-
the
so
one.
That weight's on me right now.
Oh my
It's a
goodness.
lot of pressure.
Good luck.
Thank you. I'll be gray by the end of the year.
Right. Yeah. Well, I mean, and you're doing it with your cousin, which is kind of unique. I mean,
Yeah.
usually
Yeah.
it's like kind of, brothers or something, siblings, but yeah.
Yeah, he's 12 years older than I am, and he's always been like somebody that I've known, obviously through my family, but he's been a close cousin of mine. I actually found a picture the other day of him holding me while I was young while we were opening a present, and I texted him. I said, "Now we own a business together."
Right.
Can you believe this? So it's good to have that relationship.
awesome.
Yeah,
It's funny how life works.
I know, right?
That's really cool.
Yeah.
Yeah, I gotta imagine there's so many different avenues that we could go down as far as like the dynamics of a family business,
absolutely.
especially like the having a parent involved, a cousin involved, a sibling involved. There's just a never-ending story to family businesses.
Oh, for sure.
But
Yeah.
the heartbit of Rochester, so
Yeah.
gotta have them.
Well, and think about it. I mean, that would be like our kids working together.
Yeah,
Like
yeah.
the Pitti Group. Like,
That's weird to think about,
Right? I know.
But a possibility.
But it's a
Right.
possibility.
Yeah.
And our kids are about that.
About that
same
separation of age
difference. Yeah.
That's wild.
Oh my God. I'm just picturing the Christmas picture from this past year where they're holding them. Like my kids are holding your kids.
Oh, yeah.
Yeah.
Who knows? Maybe they'll be reflecting on that.
I know, right?
When we're old
Something,
and gray.
something tells me that we might not be doing podcasts, 30 years from now, but you never know what the new thing will be.
You're right.
But so I mean, obviously, we'll talk about a number of things today, and but we can, I guess, start with the big one. Most people think when they think insurance, homeowners insurance, and typically your home is your largest asset. So what are things that people should know when it comes to kind of insuring your home and protecting that asset of theirs?
Yeah, that's a great question. And you're right. Your home is typically your biggest asset. And I think a lot of times people were like, well, I need insurance because I have a mortgage and I need to close on the home. But they're not thinking about what that insurance actually is. Some people do. And those are some of my favorite customers when they're asking questions and they're kind of involved. But a lot of what we do is education. So for your home, it's important to have an agent, I think. A lot of places you can get quotes online, but you don't know exactly what you're getting into or what the coverages are. I had to take a 3-week course and an exam to become an insurance agent. So there's a lot behind that. So when it comes to your home, a lot of what you're looking to, protect is the actual value of the building itself. So on an insurance policy, it's called coverage area dwelling. And that is probably one of the more important things to make sure that you've got like the right value on that. And some of the ways that we come up with that is to work with our companies with like replacement cost estimators and things. But what goes into the value of your home is like your square footage. If you, one of the big things that a lot of people don't disclose is if they like do upgrades and stuff to their home. So let's say you buy your home and 3 years later you upgrade your kitchen. Well, now you've just added value to your home. You want to make sure you contact your insurance agent so that the value is appropriate to actually what the value of the home is. Yeah. There's a few different ways to insure a home depending on, what you're looking to do. There's something called replacement cost value, which we highly recommend, which most companies do. And that essentially is if you have some form of a loss, you get the good example is if you were to have a roof, half the roof blows off, it's a $10,000 loss. The insurance company pays you that $10,000. Some people will choose to insure things on an actual cash value. There's a time and place for that. With actual cash value, they end up taking into account depreciation. So if you have that same roof loss, half your roof is gone, they'll say, okay, it's a $10,000 loss, but the roof is 10 years old, so they depreciate it, and then you'll get whatever the difference is. So, there's some minor things like that that you'd want to talk with somebody to make sure that the home is insured correctly. And then there's liability attached to the home, and there's a few other things. Now, that's like kind of the main guts of an insurance policy for your home is the dwelling, your contents, the liability. And then there's various other little endorsements that you can add. And this is where it becomes important to pay attention. So, like if you don't have, not every water loss might be covered if you don't have the correct insurance for it. And like underground utility lines running into your home, that's not automatically covered on an insurance policy. So there's some big ticket items, especially your utility lines, water damage, things like that, that if you don't have that type of coverage, you might be going to your financial person saying, I need to pull 10 grand out because I need to redo my whole basement.
Right.
So would water damage, are we looking or thinking just like from flooding, or is it some specific, like, what if I were to, we got young kids, or mine are a little older, but, they leave the bathtub on and it overflows and, it comes through the ceiling. I mean, like, would that automatically be covered? Do I need something specific for that, or?
There's a coverage called backups of sewers and drains. So a lot of times you'll see sump pumps that back up, or you'll see toilets or various drains and pumps that you might have in your house back up. That's a good question about kids leaving it on. I would imagine something like that would be covered just underwater damage on like a standard insurance policy. But if you were to have like your sump pump overflow, or let's say the town reversed the water pressure for some reason and it blows out of the drains and pumps and then your whole house is covered in water, that's not automatically covered. You would need an endorsement that covers those specific things.
Yeah, I gotta imagine if it's your fault too, like that's gonna be a difficult conversation. Like if I accidentally leave the sink on or the tub on and I flood my house, I can't imagine they're gonna be like, oh well, here's a check for fixing your mistake.
Believe it or not, insurance, we call it the stupidity clause. But they will, so like, for example, if you were to go out and grill and like you just never cleaned your grill and you had a grease fire and it caught your house on fire, fire is a standard covered causable loss. Unless you did it intentionally,
right.
That's a different story. But if you did it on accident, insurance does kick in and cover those types of things.
Oh, that's nice.
And that's the big thing. You see those people that have their grill right next to their house, and then you drive by some people's house and you see the melted siding because it's like, but it's like the stupidity clause, I guess.
Yeah, absolutely. What we tell people a lot too is they'll say, well, they want either like a high deductible or they want something that allows the premium to go down. And obviously with your deductible, it's whatever your first amount that you're going to pay out of your pocket. Right. So I just tell people you can have a higher deductible, but it's a good idea to take that deductible money, whether it's $1,000 or $2,500, and just throw it back into your house into some risk management stuff, like making sure your gutters are good, maybe building a spot for your grill that's not right up against the house, anything like that you can mitigate like risk on is what we tell people to do.
Yeah, that's a good point. Now, I believe there's a certain amount of coverage you have to have on your home up to, 80%? Mm-hmm. And then whatever, I guess, is left over, God forbid you were to lose your house, you have to come up with that leftover amount.
Yeah, that's a great question. Not many people know about it. It's called co-insurance. So, and I think sometimes when you have a loan, you have to have your home or mortgage, you have to have your home insured to a certain value, and they make sure that we do that. But if you can incur what they call a co-insurance clause. So like if I chose to insure my house for less than 80% of its value and I have a loss, there's a formula, but there'll be a portion of that that'll come out of my pocket. So the formula is what you should have had did over should times the loss amount. So essentially, if you're not insuring your home to the correct value or within 80% of that value, you can incur a co-insurance clause, which is additional money out of your pocket if there was an issue.
Yay.
Yeah, right. It gets complicated, but yes, yeah.
Now, what about having, if you have a dog or, I know some people often have to have like an umbrella policy for something. How would that work, and what's the benefit?
That's a great question. So that's something we try to talk to a lot of people about. I think people are familiar with the term umbrella, but they're not really sure exactly what it does. So to kind of break it down, an umbrella policy essentially is what it is. It's an umbrella that sits over all your underlying policies, whether that's your automobile, your ATV, your boat, your home, whatever that might be. So if I have $1 million liability on my home, let's say I have a guest over, they trip and fall, or God forbid somebody passes away on my property, that $1 million limit on my home policy is going to get eaten up pretty quick. So that's where this additional umbrella policy comes in. It's an additional form of money for you to tap into if you were to have a claim. It's really good for everybody, but especially if you're somebody either of like a high net worth individual or somebody that has a lot of assets or maybe a business. That umbrella policy just gives you that additional layer of protection to protect you from having, a loss where they might go after your personal assets,
Right.
your home, your
Actually,
business, things like
I feel like everyone's had that nightmare story they've heard where an accident happens on their property, someone like steps in a hole and breaks a leg or something like that, and now you're getting sued. Yeah, if you're a high net worth individual, that could be pretty catastrophic.
Yeah.
Yeah, and we live in, unfortunately, a very sue happy society, and people look to recuperate everything they can, and sometimes more. So having that additional layer of money to tap into. So again, I'm not coming back to my financial advisor saying, well,
Yeah.
I need to do something with this money I have invested.
Right, right. Does that help with like legal fees, or like, I guess, what's covered in that scenario?
Legal fees are a big one. So insurance will come to your defense. They'll pay for your lawsuit defense. So yes, an umbrella policy would tap into that. If there is an injured party and there's medical expenses involved, or maybe there's a judgment rendered against you for a lawsuit, some of that umbrella money can go towards paying those things.
Man. It's scary.
I know.
I think about it, and
Adds up quick.
It's tough. It does add up quick, and I try not to fearmonger with insurance because everybody says, "Oh, well, I have insurance, I buy insurance, but I never want to use it, or I never need to use it." And sometimes I'll tell you not to use it. But in the case of a large claim or something that we just discussed, it's pretty vital to have so that you're not left holding the bag and finding out a way to pay out of your pocket.
Yeah, that premium doesn't seem so bad when
Right.
you're
right.
when you have to actually use the policy. It's like, oh, well, that might have been pretty worth it.
Yeah, and I know I've seen in the news lately there has been quite a few house fires. One actually just down the street from me the other day, and those are a prime example of that is such a catastrophic event, both for your home, both for you mentally, financially. So to have that peace of mind that, okay, well, I do have an insurance policy that will respond, and hopefully it's written correctly, kind of eases that a little.
Yeah, I saw one of those the other day. It was a battery exploded and caught a garage on fire.
Like a car battery?
It was not a car battery, but I have also heard of a car battery doing it. But no, it was just a different battery that they had in the garage, and it just caught fire.
It happens pretty quick. We had an insured that rode his motorcycle, didn't wait for it to cool down, put the cloth cover on it, left it in the garage, and within half hour, half the home's on fire. So
God.
Yeah.
The stupidity clause.
Right. Right.
Yeah,
goes
and
into effect there.
And it's just like you don't think about it until it happens. It's
Yeah.
just like, oh, wow, that was a terrible idea.
Yeah.
Exactly.
So, I mean, another big one that, we often think about, is auto insurance.
Mhm.
And, everyone, it's another insurance that you hate paying for, but obviously it comes into play and you need it. So, anything that people need to know about auto insurance? And
Yeah, that's a good question. Again, you nailed it. It's one of those things that people are like, well, I got to have it because I have to have my car on the road and the state requires me to have it. But again, if you don't have the right coverage limits, and this is, again, where it's nice to talk to an agent who can kind of guide you through this process. There's a state minimum that they require you to have. Those state minimum limits are very low. One accident, even a minor accident, and you could be eating through those fairly quickly. So we do suggest that, when you're looking at your insurance policy, that you have higher limits on the policy for bodily injury, liability, property damage, those types of things. There's ways to lower your premium. One of them is being a good driver. I know that can be tough with some of the people on the road.
Right.
But keeping a clean driving record, defensive driving courses also play a good factor into lowering the premium. Some companies will give good student discounts if you have like a teen driver, things like that.
Yeah. Speaking of teen drivers, because I'm gonna have one in the next couple of
It's
years,
terrifying.
which is scary to think.
Terrifying. Get a really fast car.
Anything, obviously, what's it?
A really fast car.
Yeah. Right?
She's got places to be.
Yeah, she got that. I don't know. I think she's going to be my conservative driver.
You think?
I think so.
That's good.
I hope so.
I hope so too.
So, with that, like, what should I prepare for? Obviously I have a little bit of time, but anyone that has teen drivers, as far as insurance, and, a lot of them, maybe they have their own car, or maybe they're driving their parents' car. Do they need a separate insurance for that, or do you need to add them?
That's a great question. We get that a lot. Do everything you can to mitigate the risk, meaning, driver's education courses, taking them out driving, letting them figure out the road. And so it's not just like this foreign thing and then they're out there causing a whole bunch of accidents.
Well, the crazy part is I had a conversation with a buddy of mine the other day, is that I think it's his daughter now, is 16, starting to learn how to drive. And the difference when we were kids is we were looking out the window. We knew exactly what was going on, how to approach a four-way stop, or when to turn. When you're moving left, you move over a little bit. When you're turning right, you move over a little bit. Kids these days, and when they're in their car, they're on their phone or their tablet or whatever. So they don't even really.
Well, you're not watching your parent or whoever's in the car with you drive.
Yeah.
You're not witnessing what's going on.
And so he said, like, it was so, an eye-opening moment when his daughter really didn't understand, like, how to process that when she was already, behind the wheel. She was like, well, what do I do now? Right?
It is. And now with the way technology is in cars, you're almost more, I find myself doing it, but you almost become too reliant on the technology and you kind of lose that, like, moving your head to change lanes or whatever it might be. So,
or backing up.
Or backing up, man. I look at that camera all day long. I never check my mirrors anymore. Yeah.
Yeah. I mean, even the technology in vehicles now is even more distracting. Like before, it was just your phone.
Right.
And now it's just this huge screen on the front of your dash that's like has all these buttons and light ups. And like if you're listening
your text
to music,
messages pop up.
Right. Exactly.
Which I guess is like going back to having a teen driver. Those things are good because it helps them drive more safely. But if you don't have that technology, it's always good to have them figure out how to drive, a vehicle on their own. God forbid, nobody drives a stick shift anymore. That's a guaranteed anti-theft device these days.
Right. That's true.
The Kia boys would have nothing on that.
Yeah, right. I know. But to go back to what you were asking, as a teen driver, what we typically recommend, most insurance companies aren't going to write a teen driver by themselves. And if they do, the premium is typically fairly outrageous. So what we suggest is that they are added as a driver to the parent's policy. It gives them a little bit of insurance history. I did that with my parents. They worked out an agreement with me where I paid my portion of the premium to them. So it kind of starts to get that idea of, I'm paying a bill and I'm responsible for this. But we do suggest that you put them on your current policy. You can have them stand alone by themselves, but it probably ultimately will cost you a little bit more money.
Yeah. That's not fair.
No.
No.
And I believe men they have a little bit, is it like a higher risk to women, especially like the younger men, I believe. At least from what I've seen, I believe they have a higher premium than.
I've heard that. I don't have like any solid proof, but I do believe insurance is all actuarial, statistical information. So statistically, I think if you have a young teenage male, their risk tolerance is a lot higher. We'll say.
You essentially said it with your daughter. You think she's going to be the more conservative driver.
Yeah. Well, and also, is there a difference between, there's men and women, but then single and divorced and married couples? I mean, like, I know when I had to apply for new insurance, it asked single, married, divorced, and, I put divorced. And, like, does that affect, should I have just gone single? Is there a difference there?
There is, depending on the company. And again, it all kind of gets rated. Everything's so technology forward now that we take the information like your marriage status and those things, and we put it in, and then it goes through their system and rates it. I don't know exactly what the difference is. I do think that plays a little bit of a factor in there. To be honest, something I just learned recently is even like a credit score or an insurance history score plays a factor in your premium. Sometimes if we have two people on a policy together and you just switch the first named insureds, the premium changes. So those are some things we're trying to keep up with on our end in terms of technology and how they rate things. But there's discounts available for everything, and then the rate goes up for everything. So it's kind of a give and take. Yeah, that's ultimately, especially now with the way that underwriting and insurance is so tight, that it really pays to have a clean driving record, or to even contact your agent like, hey, look, I have a windshield that cracked, and typically we'd say, okay, first time, go ahead, get your windshield fixed. But if it's the third or fourth time your windshield's broke, then that goes towards frequency of claims. And when you go to shop your insurance, it shows a higher frequency or number of claims. Sometimes they'll tell you, maybe you just want to get that one fixed on your own.
Yeah.
Now, so I bought my truck back in October, I believe it was. And then December, somebody hit it in a parking lot. I ended up having the other person's insurance cover the damage. Does that have any effect on my insurance? Like after a large period of time, or like say I get hit again, like does that have like any kind of effect?
So if it's a not at fault accident where somebody hit you in the parking lot, typically those things show up on the insurance report. If you're going through a broker, a lot of the times I can explain that to the underwriters at the company. Hey, look, these 3 accidents were not his fault. It does show up on there. And if you had in a year 4 or 5 of those, it could play a factor. But if it's a not at fault accident, it's not weighted as heavily. Or the other thing that they call is a catastrophic loss. So like all the hailstorms and stuff that have been happening, obviously Farmington, Victor, that area, all those cars had some form of hail damage. So that's categorized as a catastrophic loss, and it shows up on a report, but it's not weighted as heavy, if that makes sense.
Gotcha. Learn something new every day.
Right.
That's in the deep insurance weeds.
Put a bubble
Because I
wrap
remember
around my truck.
same thing happened to me with my truck. I was in a parking lot. I was at a restaurant, came out after lunch, and someone had just smashed into the front end, left. So there were no cameras that could pick it up, or so I had to do a police report, I had to put it under my own insurance and pay the deductible.
I was luckily a good Samaritan, saw it and got the license plate information.
Yeah.
Yeah, that happens all too often. We have a lot of people that come in and say, I was just at the store buying something, and now I've got a door ding or half my bumper's missing because somebody hit me and then just took off.
Gosh, that's frustrating.
Yeah.
Right.
I guess that's why you have insurance. And
exactly.
The one of the reasons that rates are going so high, because I know that's a common thing. People are like, oh my God, my insurance just goes up and up. Well, the cost to repair cars is a lot higher now with all the sensors and bumpers and cameras and things like that. We're getting through some of the backup of shortage of stuff from COVID to like the time it takes cars to get fixed. The lack of skilled labor there's a whole slew of things that go into the issue of a higher premium, which is pretty crazy. But if you think about it, your bumper 20 years ago that was plastic, right, cost you X, and now with
it's got
50 million sensors in it, it's
cameras,
cost you 2 times that.
Yeah. I know someone that had just like some bumper damage on the front of their vehicle, but they have so much technology in that front part of the vehicle, they ended up just totaling the whole car.
It's nuts. Yeah. And forget it if you drive a Tesla. They're great vehicles, but the cost to repair sometimes can be fairly high. That's coming from someone that doesn't own one, so maybe you know something I don't. But
no, luckily I haven't gotten there yet.
Knock on wood, man. Knock on wood.
Yeah, but I guess what you save in gas and oil changes and stuff.
That has been insane.
Oh yeah.
What I've saved in gas, it's mind blowing. Like I never thought I'd drive an electric vehicle, but I went from a Silverado V8 6.2 liter engine, which guzzled gas, and now it's like this is perfect. Yeah. But yeah, I'm sure I have heard that some of the costs to repair, because it's technology. It's a tech vehicle.
Oh yeah.
But we'll see.
You can will it drive itself on the highway? Have you tried that? Yeah.
Yeah, I could just flip a switch and it just drives.
That's phenomenal.
Yeah. Oh yeah, it's nice. It's
Who knows? Maybe she won't have to learn how to drive.
Well, that's the thing. Give her that.
That's what they talk about in insurance all the time. Is we'll get to a point where most likely we'll have some form of self-driving vehicles, and it's like, well, do I even need to own a vehicle anymore, or do I just call up one that takes me to work? And then how does the insurance respond to that? I mean, it's not my vehicle that I own. Is it on the manufacturer? Those are.
If you're in your vehicle and you're not driving it and it's driving itself and you get in an accident, then
You're ultimately still responsible.
I feel like it ran into that. I did not.
It just shoved the accelerator on and I couldn't stop it.
Right.
I couldn't stop it.
Just send the bill to Elon.
Anything else with auto insurance, or that people should know, or
that pretty much covers it. Try to keep a clean driving record. Put your teen drivers on your personal policy, and consult an agent.
What happens if you don't put your teen driver on your policy?
There'll be companies that will write that they'll be able to obtain insurance. It could be a lot more difficult, and your premium most likely is going to be quite a bit higher. But it's possible.
But so let's just say, my daughter starts driving, and I don't add her at all or anything, and she gets in an accident, God forbid. Like, what would does she just automatically fall under my insurance, or?
That's a good question. So if insurance follows the vehicle, so like if she took one of your vehicles with permission and went out and crashed, then yes, your insurance policy would respond. That's why it's important, like when you're getting an insurance quote, that you do disclose, I've got children in the home, or I have an in-law or a grandparent that lives with me. Those are all underwriting questions that they ask, and they'll list them. Typically, if they're of driving age, they'll list them as an operator on the policy. But yeah, if she just like day one gets her license, you haven't had a chance to put her on there, and she takes one of your vehicles, then.
Now, we both own businesses, in different industries, but what about business insurance? What's needed, or is there typical insurance that you should have on your business to kind of protect yourself?
That's a great question. So with commercial insurance, it gets a little bit more nuanced, just in terms of, we try to insure you. It's not like a blanket policy that covers every business. There's a lot of little nuances depending on exactly what you do. So again, that's why it's important to chat with somebody who's well-versed in insurance themselves. But typically, if you own some form of a business, depending on what it is, there's a general liability policy that gets put in place. And that covers you, let's say you're a retail shop, people coming and going, somebody trips and falls. Maybe you accidentally infringe on a copyright and you get sued. Or you make a remark that's liable or slanderous towards somebody, and again, you get sued. That's where that general liability kicks in. And then typically you have some form of property, whether you own a building, whether you have a podcast recording studio, you have tables and chairs, there's a property portion to an insurance policy.
Break a vase.
Yeah,
you break a vase. Yeah. It was an accident. All right. It was a slight turn.
We're here for not even 15 minutes.
5 minutes. I just sit down.
If you have employees, New York State requires you to have workers' comp and disability paid family leave. So that's the general overview. I guess the biggest thing that you want to make sure is that you're insured properly. So what I mean by that is, if you're a contractor and you're working with dynamite and working in like an explosive environment, you want to make sure that your insurance agent doesn't classify you as like an interior carpentry work type guy, because
right.
It's not classified right. It can cause issues down the road if there's a claim. So making sure it's specific to your industry is probably the biggest thing.
Yeah. I gotta imagine, people that are, in our industry, your industry, attorneys, have like an E&O insurance to help protect them, again, in a specific area, and for those kind of liabilities as well.
Absolutely. Yeah. There's more like nuanced coverages. If you have like a director or board of directors or somebody, there's directors and officers insurance. If you're a restaurant, there's liquor liability insurance in case somebody gets overserved. So yeah, there's some specific things per each industry. Yep. Errors and emissions, a big one. We carry a policy, probably some of you, just because the nature of what we do.
Yep.
Now, what about like some of these, especially in COVID, you had a lot of people like start their own business. Like maybe it's just a little side hustle, that kind of
culture
that grew. Etsy was huge. And probably it still is. But do you need insurance for that side hustle, or should you have insurance?
I mean, if coming from my seat, yeah, probably. Now, it's a risk thing, right? So it really depends on what you're doing, and if you feel that you're having exposure to maybe a product that you're selling where you might get sued or something like that, I would certainly suggest that you get some form of an insurance policy for your side hustle, depending on what it is. You don't have to go out and buy the massive $1-2 million policy. You can tailor it back towards kind of more what you're doing. But yeah, the side hustle culture is huge. So we get people all the time that are like, I'm a banker by day, but I remodel people's homes on the weekends. We write policies that would cover them for for that small exposure that they have.
Yeah.
So as a, if you are hiring someone to work on your house, like a contractor, or you have a plumber come or something, is that something that you should ask about do they have insurance to kind of protect yourself? Because, God forbid you have some random guy or girl come and fix your toilet, and all of a sudden it's leaking. And
getting back to what we were just talking about, if someone, like I had a fence put in my backyard, if they go through a utility line that's going through my backyard or hits something and it ends up causing damage to my property, I gotta imagine there's a great deal of insurance on that side as well.
Yeah, you nailed it. In a situation like that, you would want to make sure that they do have insurance, because that's not your fault. So you would have to go back against that contractor's insurance, and hopefully they do have some form of insurance. Otherwise, you may be making a claim on your homeowners. But what was the first question you asked me?
So, like, if I have someone that, like a plumber, should you say, do you have insurance, and ask for a copy of that? Or is it just, I've never done that.
I've never asked for a copy of it.
Is that something you should do?
You can ask them for what they call like a certificate of insurance. And basically it's a form that the agent or whoever can produce that shows they've got coverage and who the company is and stuff like that. Honestly, I would say the majority of people just kind of trust that they have it. You hire somebody, right. They may become recommended, so they're thinking they're reputable. But if there's no harm in asking. If there's somebody that gave you a better quote that you didn't know much about, you could ask for what they call a certificate. It just shows that they've got coverage.
What if they're doing work on your roof and they fall off the roof and they're not insured?
Right. And now somehow you're being sued because you didn't provide a safe roof for that.
Right, exactly.
It's like, you knew it wasn't safe. That's why I hired you.
Right. That's why I'm not up there. Right. I would have fallen off.
Oh man, it's just things that you don't really think about until now that we're talking about it. It's like, man, maybe I should, and I think fixing a toilet is probably a little over the top, but if you have a major renovation, you're having your basement done or a big project, you probably want to make sure that that contractor has insurance.
Yeah, a lot of the times if you're adding like an addition or something to the home and you have to get permits and stuff through the town does require that the contractor typically has some form of insurance, and they require like a certificate on file showing that they've got insurance for their workers, for their business and things like that. But again, if it's just like a small interior kitchen job or something, I probably wouldn't have asked myself.
Right.
Yeah, that could be catastrophic.
Yeah, I mean, you see it all the time where we've had incidents where an electrician was coming in. Obviously, they kill all the electricity of the home. They were installing a new sump, and they turned everything on besides the one breaker that ran the sump pump. And then we had that catastrophic rain. I forget when it was. Sump pump didn't turn on. Newly finished basement floods, and you're $25,000 into redoing everything you just did. So yeah, that contractor had insurance. It all went through that person's insurance, and you didn't have to claim that on your home.
Yeah. Oof. That's huge.
One switch.
Yeah, right.
One switch.
Gosh.
The one you were working on.
Stupidity.
Stupidity clause. Yeah.
Oh man.
Oh man.
So other side hustle that has been picking up or is big now is landlords, having a rental property, Airbnbs.
Mm-hmm.
What do you need extra insurance for that? Because now you're having people live in your home or your second home, staying there. I'm sure there's some sort of liability factor there.
Absolutely. Yeah, you're right. That's becoming more and more popular. People that have like a portfolio of homes that they bought that they rent out. So yeah, there's specific policies, like a landlord policy that you'd want to make sure that you have on the building that typically I tell people to increase your liability limits if you've got a landlord policy, just because you're not in control of that property. You don't know what these people are doing when they come and go. But yes, it is something that I'm not an attorney, but what I see a lot of people do is they put this into like an LLC or some form of a business name, and then they insure the property that way. We can certainly keep up with all that. We have products that'll insure each individual home. And it kind of works the same as a homeowner's policy in terms of like coverage for the dwelling and things like that. There's just a few more nuanced coverages, like loss of rent. So if the home were to burn, I can't collect my $1,500 a month, I can get reimbursed by insurance. So there's products out there for that.
So if I've got multiple rental properties, are each one individually insured? Can I wrap them all into one?
It really depends. If it's all under one LLC, you can write a policy that has all those properties there. If it's multiple different LLCs, we could still write policies. It just, you want to make sure that whatever entity owns that building is the one that's on the policy. So like if you had 123 Main Street LLC, and you insured 3 buildings on it, and then the other one down the street was in a different LLC, but you put it on the same policy, could cause some issues.
Gotcha.
Yeah, I don't know. The thought, I don't have a Airbnb, but the thought of like having people like in and out all the time, just the liability of it.
Yeah, I mean, leaving a door open, not locking it at all, windows.
Yeah.
I mean, you get water damage if you leave a window open. You could have someone rob you.
Airbnb is a whole different game. Yeah, that's there's some, when you contract with Airbnb, there's some coverages that come included during the time that it's rented, but it's not like you shouldn't just rely on that. But again, a lot of people, especially around Canandaigua, they'll have a seasonal property that they rent out to that.
Yeah, especially when some of the people, they live in a different state. And they have a vacation home down in Florida, and they start renting that out, and and you're not able to get down there, and and maybe they only have one property, so they don't want to hire a management company to do it. I mean, it just seems like a nightmare.
It looks difficult to be like a one-man show and own a bunch of properties, but yeah, that's just looking from the outside.
Yeah, I mean, and you see on social media all the time, everyone's like, well, if you want to become rich, you have to own 15 different properties, and you need to build your rental income, and Airbnbs is the new like hack to becoming wealthy.
Right.
It seems like that could be a large avenue for some liability and some extra.
That's where that umbrella policy comes in, especially if you own multiple different properties like that. Your risk for something happening is a lot higher. So you want to make sure that if something does happen, you've got the appropriate backing to pay for that. And I keep coming back to this. Otherwise, they're trying to figure out where to pull the money from.
Yeah. Now, I remember when I was renting in my much younger age, they did a background check and a credit check. Does that help as far as the insurance goes, as far as you're renting?
It's a good risk tool for you as the owner to make sure you put somebody in there that will be responsible. Some companies will ask if those things are done, others don't care. But that's a good risk management tool just as the owner of the building itself.
Yeah. I'm sure it's there's plenty of opportunity to grow your assets with rental properties and Airbnbs. It's just making sure that you're protecting yourself. So all that,
extra income you're getting,
extra income and growth, it doesn't just disappear because you failed to kind of protect yourself.
Yeah. Made $50,000 this year in extra revenue, and then I had to pay it to that guy.
Yeah. 50,000 would be low too, if it's something catastrophic.
Right. Yeah. So, seriously. Yeah, you'd be negative probably.
Right.
Negative 50 grand.
What about collectibles and other valuables? Would that fall under an umbrella policy? Or let's say someone, for example, has a whiskey collection, okay, and of some sort of significance. How do you go about protecting that, or what would you recommend?
Are you speaking from experience here? Maybe. Yeah. It really depends. So, like on your traditional homeowners policy, there's a portion called contents, and that's the items inside the home that you own. Now, if you are like a connoisseur and maybe you have a couple bottles that are worth $1,000, $5,000, $10,000. What typically you can do is you can schedule those specific items on your homeowner's policy. So you can say I own 10 bottles of X whiskey. Each one is appraised for $5,000. You're going to want to make sure that those are explicitly like on the homeowner's insurance policy, so that if you were to have a loss, obviously that's pretty good fuel for a fire.
Right.
But if you were to have a loss, you can
Boom.
recoup the money. Yeah, right. You can get back what you have in it. You'll see that with like baseball collection.
Yeah.
Yeah, that's huge right now.
Card
jewelry,
collection,
things like that.
Yeah, it's wild. Like, I feel like when we grew up, like our parents, grandparents, like the sports cards are valuable, and then our kids now, the sports cards are valuable. When we grew up, it's like they made so many of them.
No, I know, it was nuts.
But yeah, sports cards are huge right now.
Yeah, collections. Firearms is another one that a lot of people ask me about. Like baseball collections. Jewelry is another big one.
Yeah.
So
just having each item under your, is there a limit
I was just about to ask that.
to that?
it's going to depend on the company that writes the insurance policy. You know, and it would depend on the claim. So there's no like if something's over 1,000, you have to list it on a policy. There's no like cut and dry between that. I typically ask people because the value of something could be 1,000, and I think it's it's worth the most to them ever on the earth. Whereas we might look at it as right, exactly. So it really depends. I don't have a solid like if it's over this amount. If you're looking at that being like, wow, I'd be upset if that went away and I don't know how I'd get my money back on it, you should probably think about scheduling it on a homeowner's policy.
Yeah, for sure.
Engagement ring.
Yeah, engagement ring, jewelry that was handed down is a big one. I've seen all kinds of we've insured a train collection before. Gentleman had quite an extensive high-end like toy train collection.
Lionels.
There was all kinds of
you.
stuff. Dude, this guy's basement was nuts. It was like a wonderland. I mean, he had trains everywhere, and the little people and the stations. Some of them ran on actual like little bits of coal and steam.
Wow.
And
Yeah,
That's
dude,
wild.
Our grandfather had that.
Yeah.
Yeah,
I've got one of the trains at the house.
Yeah, because I still have
And bubble
a
wrap.
bunch of Lionel trains. Yeah,
those could be worth some money.
I should probably go look for those.
should probably look at that.
That's not in my insurance.
so-
I can tell you that right now.
I know, right?
I didn't list that at all.
So with the like sports cards, or whether it's whiskey or a Lionel train, when you insure, say the value, where do you get that value from? Someone might say the sports card is $1,000 or $10,000, but you could buy it in a pack of cards, and it's $2 for a pack. It's probably not $2 anymore, but $10 for a pack of cards. But so what do they gauge the value on? Do they go somewhere to get that, or how do you provide that information?
That's a great question. They'll take any form of an appraisal from like a reputable company. So jewelry is obviously an easy one. When you buy it, they give you the appraisal, what it is, spells out the cut, clarity, all that stuff. Same with baseball cards. I think there's a grading system. So anything that you can provide that's not just like a receipt, like, hey, I bought this at the store for this amount. So any form of like, there's got to be whiskey connoisseurs out there that could come in and like give a
I do that as a side hustle.
I was going to say, that might be an
Appraisal.
opportunity for you.
So yeah, I mean, I guess you'd have to go on, because they got the Sotheby's or whatever that do online auctions. Would that count?
Yes, you can do something like that, and sometimes they'll even do something called agreed value. So like if it's like a super niche thing that like you couldn't get a appraisal on, you can disclose all the information to the insurance company, and then you guys together can come to some form of an agreed value on the item.
Yeah. Yeah, that's interesting. Because whether it's a big collection, or some people might just have one item that has been passed down, or paintings, that have significant value. I mean, that's something to kind of keep in mind. And
Sure.
Is there anything we haven't covered that you feel like is like, it doesn't have to be related to kind of what we've discussed, but, this is something that you should think about regarding, insuring some of your assets, the whole umbrella of this episode was protecting your assets. Is there something that, we haven't covered that you think would be beneficial for people to know?
We covered a lot of ground and a lot of good things that, I didn't even know before I got into the insurance industry. But essentially, I think what it boils down to is just, I wouldn't recommend doing it all on your own. Just like people would rely on you guys for financial advice and how to, do things with markets and what to do with their money. I would suggest that you go to some form of a broker, because they will guide you in the right direction as to your values on things and how things should be insured. So if I had one piece of advice, don't just go and find the cheapest thing and move on with it, because it could bite you in the butt down the road.
No,
Yeah.
you could have said it.
Yeah. I wasn't sure. Bite your
Right. We just put the little E on the episode.
Brian from JD Chapman Agency made this an explicit episode.
Right.
This is outtakes of me swearing.
Right. With that, one question I have is, how often should you review your insurance?
That's a good question.
That's a great. So the best time is on your renewal. Our company does send out like an email just saying, hey, your policy's renewing. Have you added any drivers? Have you updated your kitchen? Those types of things. So the renewal is always a good time to look at those types of things, or anytime that you might be doing something as a business where you're adding an exposure, you're adding an employee or something. It's good to contact whoever your broker is and say, hey, I'm doing this. Am I covered? So we try to evaluate everything at least on a yearly basis with people.
Okay.
So build a good relationship with your insurance agent. Make sure you're staying up to date. Make sure you're communicating. And, even if you don't think that it's pertinent, just bring it up and just see, because, like we say all the time, you don't know what you don't know.
You don't. And I'll give you a prime example of this. We did have an insured that had a home. We had it insured for X. They put maybe $50,000 worth of a new kitchen in there. Wasn't disclosed to us, and that is up to the person that owns the policy to disclose that.
Yeah, I mean, how would you know?
Right. I don't go and inspect your house.
You don't?
Not yet.
Your insurance guy just knocks on the door.
You just want to check some things
out. They had a fire, and the insurance did not cover anywhere near the value of the home.
Yeah.
Oh, man.
Gosh.
Yeah.
So, prime example.
That's heartbreaking.
Stupidity clause.
Stupidity clause. Circle back. That might be the title of this episode.
Yeah.
That's a good one.
Yeah, I like it. Well, perfect. I appreciate all the insight and for the explicit presentation today.
Right, yeah.
Yeah, thanks for
No problem.
And but no, really appreciate all the insight today on insurance and things that I never knew. And I feel like I've been around long enough where I've had homeowners insurance and car insurance and everything else. And
I gotta go look at my policy, see what it's
yeah,
covered.
that's what I want to make sure I do the same. But any questions? If anyone has any questions, feel free to reach out. Thank you again, Brian. And I'm sure we'll talk soon.
Best of luck with the third generation.
Yeah. A lot of responsibility on you.
Responsibility on shoulders. If you can help him keep this business going, he's got a lot on his shoulders.
Yeah. And then when our kids watch this, they'll know that they have a lot of responsibility on their
Absolutely.
shoulders.
So. Absolutely. Don't mess it up.
Well, thank you both for having me. I appreciate it.
Absolutely.
Perfect.
Thank you.
A lot of fun. Yep.
Thanks, Brian.
Yeah, no problem.